Hello and welcome back to Duca's Copy TV. In the studio today is one of our regular guests, Thomas Veillet, who is a financial advisor and blogger, to take us through his opinion, his latest opinion on the markets. Thomas, welcome back into the studio.
Thank you very much.
Now, before we get into the review of latest market news, I'd like to start by challenging you to answer this question. Why are markets still reacting, or why do markets react in a sort of short-term sense? I'll give you an example. Take the recent resignation of the ex-French Prime Minister Jean-Marc Ayrault. A lot of people expected him to go. There was no real surprise. There was sort of trouble on the horizon, and yet the market seemed surprised. Why do you think this is?
I don't know if the market was surprised. For sure, people need some justification to buy or to sell. So the question is what we're going to do if we hear that news. I don't think it changed anything at all because, as you said, Ayrault should go. There is no point for him to stay. It was even a good news, I would say, in terms of politics. But anyway, the market needs to have some justification for everything. I mean, one day it's Yellen, one day it's the China, and the day after it's Ukraine, after that it's Crimea. So everybody is looking for a justification to do something, and the people are like sheeps, and they are just following everyone. Everybody is following everyone, and say, okay, they are going there, I'm going with them. But nobody is able to stay alone and say, okay, I'm going to make my own mind. No, they just need to follow people, and there is also the fact that everything is so short-term view. Ask a trader right now what he thinks about the next 2 months. He's got no opinion. He's got just opinion for today or tomorrow, even the next week, but it's already long-term view. So that's why the market is reacting to anything, or even some stupid news.
And so do you think that in this case with Jean-Marc Ayrault, that it was just a trigger and an excuse to trade some news to trade on, and that's why they followed it?
I believe that the CAC 40 was very close to the resistance, the 4,400. And so you use this news to do something. And you say, oh, this is because there is something, a resistance or a support. Then you use the news and say, okay, I'll take this bet. And everybody's taking the same train at the same times, and the market is moving. That's how it works right now. It's very rare to find some people who are contrariant. More and more people are going the same way because they prefer to lose money together than to make money alone. Mm-hmm. So you get the feeling that you need to belong to the crowd. So the market is looking like that right now because there is not big incentive on the economical side, on the fundamental side. So everybody knows that we are very high on the market, and but there is not much opportunity. So you need to find justification to keep buying and to keep them pushing the market higher. So everybody has the same idea at the same moment. Look at. Or we understand what's happening in China or what's happening in Russia. Suddenly everybody's getting an expert on Russia and say, Putin is going to do that or that. Then 2 days after that, no word. Look at the newspaper today. There is no news about Crimea or Russia. Nobody cares anymore.
It's very short term.
Exactly.
Very short term. We'll come on to tomorrow's headlines, Friday's headlines in a moment, mostly obviously non-farm payrolls. But something else I want to pick your brains at, again, this is obviously related to the markets. What's your view on high-frequency trading at the moment? Because I know, it's causing a lot of stir, a bit of a stir at the moment. Some people are obviously enjoying it because they're raving about it because it can make them money fast, but other people are saying it's really destroying the markets. What's your view?
I don't know if the high-frequency trading is destroying the market. There is two points of view. The guy who are against HFT and who say that it's catastrophic, it's going to destroy the market, it's not fair regarding the rest of the market, and it's also ripped the regular client. And on the other hand, you got the high-frequency trader who are making money on it and say, no, that's great. We are increasing liquidity, it's better, it's fantastic. So I don't know what's going to be the outcome, but one thing I know, there is too much people who are believing that this HFT is the new solution for making money all the time. And every time in my career, when I heard people who say, I found the right solution, the right calculation, the right formula to make money all the time, usually it was like just before a huge correction or a huge crash because everybody thought that they found the solution. I did found myself, I thought that I found the solution in 2000 when the market keeps going up every day and suddenly it stops. So I'm a little bit scared about what could happen with the high frequency trading because we don't know it works. At least I don't know it exactly works. We know that everything has to go too fast, and I do really believe that it's not why the market in general has been built at the beginning. It was to bring money in the economy, to help company to find money and to grow and to boost the economy. It was not the target to make money as quick as possible and as fast as possible. And something is not like natural. In
so you're dead against it then?
Yeah, absolutely, totally.
Thomas, so obviously some of our viewers may have seen that in the background we got the non-farm payrolls data up here. This is for February, just to let you know that this isn't March's just yet. But I want to focus on it because obviously non-farms are coming out tomorrow. NASDAQ say that there's been a seasonal adjusted rise of 191,000 last month. What's your view at the moment on non-farms? What are we expecting, do you think?
I believe that the non-farm payroll are a big joke for the last years. Usually they are expecting a number, they are coming with something else, and they're correcting the number 2 months later. So
and we've had the weather this year affecting it.
And this year there is the weather. I mean, for the last 3 or 4 months, the weather in US has been the regular excuse for the market and to say, okay, it's not good, yeah, because it's the weather. It's good, it's because of the weather. Everything was because of the weather. The last 2 or 3 publications of the non-farm payrolls were not good. It was not because maybe the economy is not growing as much as we are expecting. No, it's because of the weather. So that was the very good excuse. And the challenge that we are facing now is the fact we are in March. We are in April, sorry. It's going to be the number for March. And very soon we're going to have the number for April. So the justification about snow won't be that effective. So maybe we are facing a problem because if the numbers are not good, there is no excuse about the weather. And maybe the market should have to understand what it means, maybe because the economy is not going that well. I'm not saying it's the case. The fact is everything is psychology today about the market, and people think that might be not good because of the weather. And this time they say, okay, it's fine, we are in April, so it's going to be good.
So you're saying they were jumping on the weather as a sort of excuse?
Exactly, and especially in the non-farm payroll, we are Thursday of today, tomorrow is going to be the non-farm payrolls, and we are speaking about that since Monday. And usually when you start speaking about non-farm payroll on the Monday, everybody is expecting that like nothing happened. Look at the market this week, nothing's going on. Everybody's waiting for the number of Friday or eventually for the BC of today. Otherwise, nobody cares. They are just waiting for that. The market doesn't move, the volatility is very low, and everybody say, okay, it's going to be the answer. And finally, when the answer is out, nothing happened.
Interesting, obviously, because the US economy is improving, but there's still that issue with employment in the US. Thomas, just before we go, what are you looking ahead for next week? Anything sort of on your radar in the next kind of couple of weeks that you're looking out for?
So far we're going to start with the number of the quarter, the last quarter. They're going to start showing the number for the next few weeks. So it's going to be very interesting because we are in a very interesting technical situation. The US market is very high, and we are trying to break out on the upside, which we are doing it right now. And I do believe if the numbers are good for the companies, we might have a surprise on the upside because everybody is very scared right now. We know that the market is very high, the multiples are very high, and we are very scared. And all the companies have coming for the last few months with, okay guys, it's going to be tough in 2014, so don't expect too much. So all these strategists and analysts came with a lower expectation. So basically, they're going to come with an easy number to match because it wasn't the bar was not set up too high. So they are expecting something more easier. If the numbers are good, we can see some rally, and maybe the market will be scared again at the end of the month because why? We're going to be in May, sell in May and go away and again and again. So the scenario right now will be maybe some short-term rally just because of the number. Then maybe after in May. Yeah, as usual, for the last few years, we have seen that it works pretty good, sell in May and go away.
But you're generally bullish as usual?
No, I'm
No?
no. Being honest, I'm not that bullish, but I've been bearish for the recent days and weeks even. But something that bothers me right now is that everybody is cautious and everybody is expecting a crash. And believe me, when you're expecting a crash, it will never happen. A crash happens when you don't expecting anything.
I'll quote you on that, Thomas. Thomas, thanks very much for coming into the studio once again and sharing with us your opinions on the market.
Thanks to you.
Okay. That's all we've got for the moment here on Duca's Copy TV. Keep checking back to our website as usual as we update you with the latest interviews and updates throughout the day and of course for the rest of the week. But I'll see you next time. Bye-bye.